One of the most common questions this tax season is, how are cryptocurrencies taxed? Are they taxed? And how so? I'll explain that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Here to explain one of the most common questions this tax season, and that is, are my cryptocurrencies taxed? How are they taxed? What do I need to do? I didn't get a tax form. Do I need to do anything? I'm going to explain all that right now. Now, first, disclaimer, this is not a video recommending that you should be investing in cryptos, okay? I don't give direct investment advice. You should be working with your CFP on that. Second, this is not a substitute for working with an actual CPA to get your taxes prepared, okay? I'm going to talk through some of the how and why cryptos are taxed, but still, if you've got this level of complexity on your tax return, you really should be doing that planning and working with your CFP and CPA, collaborating to get your taxes done, make sure they're done correctly. So then let's get into it. The big question. Are cryptocurrencies taxed? How are they taxed? How do I do all of that? And the short answer is yes. The IRS treats cryptocurrencies, yes, they say currency in the name, but they're treating them like property, and they're going to tax transactions on property just like they would on any other property. Stocks, okay, cryptos are going to be taxed very similarly to stocks as we get into it. So I'll just tell you that at the forefront. Or other, real property that you have, something like that. So the IRS is going to tax it, and you're going to need to report the transactions. You're going to need to report what you're doing with your crypto on your tax return. There's even a question this year right at the top that says, hey, basically, have you done anything with crypto this year? If so, check this box as a way for the IRS to start kind of accumulating, all right, who's dabbling in this, and then what should we be looking out for on their taxes? So how's cryptocurrency taxed? It's tax capital gain, capital loss. That's better than ordinary income, which we'll get into a little bit later. But again, just like trading a stock or a mutual fund, if you buy low and you sell high, that's going to be a capital gain. You got to report on your tax return. If you buy high and sell low, that's going to be a loss that you report on your tax return. If you did all of that transacting, if you bought it and then sold it within a 12-month time period, that's going to be a short-term gain. Okay. So that's going to be taxed at ordinary income tax rates. Same, if there's a loss, you're going to be able to deduct that as well. If you held it for longer than 12 months, which many people do not, okay, and if you're a long-term holder of cryptocurrencies, you're probably not selling right now with the volatility we've seen to start 2022. But if you've held it longer than 12 months, then it's a long-term capital gain, long-term capital loss, okay? And long-term capital gains have a slightly favorable tax treatment, so you're going to really want to be aware of your holding time period. Honestly, that may influence your trading strategy altogether. So holding crypto, buying crypto and just holding it, cold storage, or not doing anything with it is not a taxable event, okay? Just like buying Disney stock and just holding it with no dividends or anything like that, it wouldn't be a taxable event either. But here, so when does it become taxable, okay? So when you're selling your crypto and exchanging it for dollars or for a fiat currency as it's noted here, yep, that's taxable. Using crypto to purchase goods or services, that's taxable. Why? Because when you're doing that, you're essentially taking your crypto, converting it to dollars or fiat currency, and then buying something, okay? So that's a taxable event. And then trading one cryptocurrency for another cryptocurrency, that's a little more complicated, but that is taxable as well. Take a look at this example here. If say you bought one Bitcoin for 20 grand, fantastic, good timing, okay? Here are the taxable events. If you sell that Bitcoin for 50 grand, then that's $30,000 of gains. Now, if you did all of that within a 12-month time period, then that gain is short-term capital gain, taxed at ordinary income tax rates, okay? But if you held it for longer than 12 months, then that would be a long-term capital gain, taxed at capital gain rates, okay? Second, if you use a Bitcoin to purchase a vehicle, okay, the value of the vehicle, the difference between how much you bought your crypto for and the value of that vehicle, the difference between that is tax, okay? And again, that same timing, whether it's short-term gain or long-term gain, is gonna apply. But because you're basically converting your Bitcoin or your cryptocurrency into fiat and then buying those that good or service, okay? And then third, if you trade one Bitcoin for 60 grand of another cryptocurrency, you're gonna have to report that gain because you're getting out of Bitcoin and into another cryptocurrency. Just like you would, well, I'm gonna sell my Disney stock and buy Apple stock. Well, from the sale of your Disney stock, you're gonna have to report from the amount you purchased it, your cost basis to the amount you sold it for, and then your new cost basis will be what you bought that next stock for. So same type of thing. So how do you report your gains or losses on your crypto, okay? And the big question this year is, am I even going to get a tax form? Will I get a 1099? Well, most companies are not issuing 1099s this year for cryptocurrencies. They weren't able to get it set up. They're just not ready to do it. Those companies, those big companies have said, yeah, we'll be able to do it for 2022. That means you'll get one in the spring of 2023 for your 2022 taxes. Many of them are not sending them out this year. The biggest point that I can mention with this is it's still taxable. If you had one of those events that I mentioned where you traded crypto, it's still going to be taxable whether you get a tax form or not. You're not going to like that news. I'm sorry, but it is. Okay, so that's like the old days. Way back when I got into the business, when you bought or sold a stock, you might not have a tax document that reports it. Might not. Certainly not one that's going to show your cost basis. You had to calculate that yourself. So we're sort of in still the old days when it comes to tax reporting with these cryptocurrencies. But it is taxable. You are going to need to report it. So you're going to report it on Form 8949, which basically is a form you fill out to get to Schedule D, which reports capital gains and losses, short-term, long-term, all that sort of stuff. So you're going to need to know the name of the crypto, the date you acquired it, how much you bought it for, so what your cost basis is, with the date you sold it, how much you sold it for, and then that will account for your capital gain or loss that's going to flow onto your tax return. And based on the date you bought it, the date you sold it, that money, that gain is going to be either taxed short-term or long-term. And then so far, we've been talking about trading crypto, right? So selling it and for fiat currency or dollars, or purchasing goods or services, or selling it and buying another crypto. But what about the other income that's attached to cryptos? I mean, one of the most amazing thing or attractive things to some crypto investors is the stablecoin and the income that you get off of that. Well, all of that is taxable, and that's taxed at ordinary income. Okay, so think of that just like earning a dividend on a stock. If you own, if you own AT&T stock, okay, sorry, number one. Number two, that AT&T pays a pretty consistent and large dividend. And even if you held AT&T stock and you never sold it, okay, there's no capital gain or loss to report on your tax return. But getting that dividend, you've got to report that income on your tax return, and it's taxed at ordinary income tax rate. So the rewards that you earn, the income that you receive on those stable coins, those sorts of stuff, all of those rewards and interest, that's all taxable to you at ordinary income tax rates. You're going to need to report that as well. If you don't have a tax return, or excuse me, a tax document that's compiling all of this for you, you're going to need to go into your transaction history. Most of these companies have sort of a how-to guide as to how to find your information that you need. Some of them even are saying, okay, well, here's a summary of all your transactions. This is not a tax document, meaning they're not sending a copy of it to the IRS like they would a 1099, but they've got all of it kind of summarized for you. If you're investing or if you're holding your crypto at an exchange or a company that doesn't do all that summarizing, you're going to need to go through your transaction history. Tedious, I know, and add it up. You're required to do that. So there's your how-to guide on, are cryptocurrencies taxable? And if so, how are they taxed? If so, how do I report them? And what about the other income related to cryptocurrencies? This adds a layer of complexity to your taxes. Work with your CFP for planning and work with your CPA to make sure you've accounted for it correctly. Because to me, I'm going to talk about the planning aspects of this, right? And if you are buying and selling crypto, if you own crypto, Should you be aware whether it's going to create a short-term capital gain or a long-term gain? Should that influence your decision making, okay? If you are working a beneficial trading strategy and that's going to create a lot of other income, are there other things that you should be doing in your financial life to help account for that, to maybe offset, create some deductions this year, contribute to an HSA, contribute to an IRA, something like that? Should you hold your cryptos in an IRA? All of these planning ideas and more you should be working on with your CFP. Make sure your CFP is doing comprehensive financial planning. They can help you with all 6 areas of your financial life. So work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.